This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices extended gains on Monday on fears a major spillover in fighting from the Gaza conflict into the Middle East could disrupt regional oil supplies, while approaching U.S. interest rate cuts lifted the global economic and fuel demand outlook. Brent crude futures climbed 56 cents, or 0.7%, to $79.58 a barrel by 0615 GMT, while U.S. crude futures were at $75.40 a barrel, up 57 cents, or 0.75%. In one of the biggest clashes in more than 10 months of border warfare, Hezbollah fired hundreds of rockets and drones into Israel on Sunday, as Israel's military said it struck Lebanon with around 100 jets to thwart a larger attack.
The spot price of liquefied natural gas, LNG, in Asia eased last week amid signs that seasonal demand may be peaking and the 5-month rally is trimming purchases by price-sensitive buyers. The price of spot LNG for delivery to North Asia dropped to $13.80 per million British thermal units, MMBTU, in the week to August 23, a decline of 2.1% from the 8-month high of $14.10 the prior week. It was also the first time the benchmark price had fallen in 4 weeks, although it is still 66.3% above the low so far this year of $8.30 per MMBTU hit at the beginning of March.
Moving on to the top news in the energy sector.
New Zealand said on Monday it would pass laws by the end of this year to reverse a ban on offshore oil and gas exploration and take urgent steps to remove regulatory hurdles to import liquefied natural gas, LNG, amid energy shortages. The law would end the ban, in place since 2018, on exploration outside onshore Taranaki, an energy-rich region on the country's North Island, as the right-of-centre government plans to lure investment to the country's oil and gas sector. Prime Minister Christopher Luxon said severe shortages over the last few weeks had led energy prices to spike to some of the highest levels among developed economies.
Russia has increased fuel oil exports in August so far after completing maintenance at some oil refineries, the Kommersant Daily reported on Monday, citing information from data and analytics group Kepler. It said Russian fuel oil exports rose to around 1.1 million barrels per day, BPD, in the first 23 days of the month, up from 900,000, BPD, for July. It said the main importers of Russian fuel oil were China, India and Saudi Arabia, which uses the fuel for power generation. Next, we have the top news in metal markets. Iron ore futures prices rebounded on Monday, supported by a softer U.S. dollar and the prospect of steel demand picking up in the coming peak construction season in top consumer China. The most traded January iron ore contract on China's Dalian Commodity Exchange ended morning trade 2% higher at 740 yuan, $103.91, a metric ton. The benchmark September iron ore on the Singapore Exchange climbed 3.2% to $99.15 a ton, as of 0340 GMT. The dollar hovered near an 8-month low, after U.S. Federal Reserve Chair Jerome Powell's dovish remarks on Friday reinforced expectations of an interest rate cut in September.
Gold demand in India during the upcoming festive season is likely to remain robust, as the substantial reduction in import duty has made prices appealing, providing comfort to retail consumers and encouraging purchases, industry officials said. Higher demand in the world's second-largest gold consumer could support a rally in global prices, which hit a record high last week. But higher demand for gold imports could increase India's trade deficit and weigh on the rupee. The primary beneficiaries of the reduced duty cut will be retail consumers, said Sachin Jain, CEO of the World Gold Council's Indian operations.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures advanced for the 4th session on Monday, touching their highest in more than 3 weeks on Indonesia's plan to further raise its biodiesel blending and concerns of rainy weather hurting Malaysia's production. The benchmark palm oil contract for November delivery on the Bursa Malaysia Derivatives Exchange rose 52 ringgit, or 1.34%, to 3,919 ringgit, $902.79, a metric ton by the midday break. The contract hit an intraday high of 3,925 ringgit, its strongest level since August 2nd.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.